Welcome, Anders. We are on the doorstep of some important elections, and with the Trump conviction yesterday, we thought we would dedicate today's update to talking about the coming elections. We have the US in the fall, we have the EU and results from the India election coming already next week, and we have the UK in July. So if we start with the US, what do you think the impact of yesterday's conviction, maybe both short and long term, is?
Well, it seems like Donald Trump is bulletproof from any type of reactions to this events. He's been actually gaining a bit lately, while Biden has actually seen deterioration in his numbers with the approval rates for Biden actually falling a bit. Biden is still leading in the category of voters that are likely to vote, but on the other hand, Trump is leading in at least 4 of the swing states that will actually decide the election. So I think the US election remains undecided. A big and important point is the debates and how well Biden will perform in those. So it's too early to call, but it's a close race.
Mm. If we think about the election in general, it's extremely polarized political climate in the US. What do you think with the impact on fiscal policy, debt management, or the broader implications for global markets will be?
Well, I don't really see that this election is so decisive for the markets, because both Biden and Trump are planning to run large deficits. And I do think that the biggest worry for the markets are the fairly high 10-year bond rates that we're currently seeing. And the fiscal position in the US is fairly soft, and fiscal restructuring with this polarization is fairly unlikely. It might be that you get a relief reaction after the election. You normally get that. The period November to December tends to be very good in the stock markets. So when we get the uncertainty out of the way, I think this could kind of be a bit of a relief afterwards. But I wouldn't say that in the medium term this is so decisive for the markets. The biggest market worry for the US, I do think, is the 10-year bond.
Is there a difference between Biden and Trump when it comes to the markets for winning the election?
I'm not sure that it would be that decisive. I mean, Trump will cut corporate tax a bit, and that will be positive. He will be very closely following the S&P 500. On the other hand, Biden has been kind of performing fairly well in terms of the US economy. So I don't think, I mean, the US business sector is in a very strong mode. We've seen spectacularly strong Q1 results. Q2 looks fairly good with PMIs recovering a bit. So I do think that the US stock market is that the only thing that you can worry about is the fairly high valuations, but fundamentally the companies are doing very well.
If we turn to the EU then for next week, we have rising populism, we have economic challenges. Where do you see will get the most compelling vision for growth and also for stability of the EU?
Well, I think the main worry is actually how much we will see, how strong the surge on the right-wing populist parties will be. Obviously, for France and Germany, it's a big issue. Both of these governments are slightly soft in the polls, particularly the SPD. And if you get a strong voter reaction, I mean, it will be more difficult for them to implement structural reforms. So I think the main thing to watch is how badly SDP is doing in France and how well Le Pen are doing in France. And obviously, it will probably imply that this political status quo that we're seeing in Europe remains. So very low probability of anything that would kind of really lift growth in Europe.
Mm-hmm. If we turn to India then, India, we've seen a lot of rapid development, and we also know that we have socio-economic disparities. Will these elections continue to positively contribute to the growth that has been happening in India?
Well, I do think that a strong election result from Modi will reinforce the market optimism. India has been growing 7% for the last 30 years. The economy is doing very well. Inflation is coming down and growth is strong. So, I mean, India during this mandate period that we look ahead are going probably to surpass both Japan and Germany as a part of the global economy. So a lot of demand in the global economy now is coming from India. So a strong showing for Modi, I think, will be on the margin slightly positive.
Mm-hmm. And lastly, we have the UK coming in on the 4th of July. We have post-Brexit, there are a lot of questions regarding the economic development and the recovery in the UK, national unity. How do you see the candidates and the election will impact this?
Well, I mean, the UK is in a very bad spot. The aftermath of Brexit is still having a big impact. Capital stock is down. Labour productivity is likely to be weak. I don't think that this election will really change that. It is very likely that Labour wins. They will try to do a bit on infrastructure and investments, but there is a really tight fiscal constraint. It's not in the card in any way that they will be able to make a trade deal with Europe or anything that would really change the situation. So, yeah, Labour is getting ready to go into government, and I don't think that will kind of have a negative impact. But on the other hand, I mean, potential growth for the UK is going to be very soft, at least for the next 2 or 3 years. So they are suffering from Brexit, and that's the way it is.
So if we sum it up a little bit with the market implications with these 4 elections, and I guess the US being the one further down the road, what do you see?
Well, I don't think any of these elections will have that big market impact, maybe with a reservation that we could probably see positive impact in India. On the overall perspective, I do think that the markets will like to put this behind it and start to look forward. So the traditional rally that we see in November, December after the US election is what I think most people are looking forward to.
Okay, thank you very much for sharing those insights with us.
Thank you very much.